Next name we've got for you guys, PayPal. Tuesday before open. If you take a look at this, I've posted this before. There's this thing called the market psychology chart, where it's a market cycle, and you see this huge euphoria run up to the top. So back in 2021, PayPal was valued at a bit over 300. Drop back down, had a bit of a dead cat bounce. This one actually came very, very close to breaking that all-time high, which leads into complacency. And a huge drop down, a redistribution portion, and then now back into, the depths of despair. So we've seen anger, we've seen a bit of depression, a little bit of disbelief. So are we past that? Are we able to see, are they first off, are they accumulating? We see a lot of volume down below, especially once we come down to lower ends. So if we see a continued push up higher, we could see PayPal start to make a bit of recovery. This is my chart for it. We do have a bit of a Wyckoff accumulation pattern with our selling climax, automatic reaction, creating some ranges for us. But it's definitely struggled. It's definitely retested, secondary tests near the bottom, and a potential spring. It's hard to tell if we already saw the spring down here on the left side, or if we're actually aiming for the spring here on the right. This one took a little bit less time, and very possibly we could be seeing that last point of supply. There is a gap above around that 87 range. I'd say, let me pull up my actual chart for you guys. We see from 82 to 86, we see a gap over there. But the thing here is, as well, Stacks has given us kind of mixed signals recently. There's a lot of puts being purchased, especially, the last few prints that we see are aiming for March of 2026, aiming below 65 and 62. We do have this big money call aiming above 75. We are right next to 75 at this point, and that's aiming for the middle of next year, 2026, June 18th. 1.14 mil. That's really the one big money situation we've seen. A lot of these are actually fairly small comparatively, 200K, 200K here. So, in terms of an earnings position to be taking for something like this, I would want to see a lot more activity coming in before I would make a decision as to, what to expect. PayPal, I use PayPal. I think it's a great company in terms of what they do, but there's definitely been a lot of competition in the space. A lot more people are using other forms of payment and using other ways to transfer money. PayPal does take a pretty big chunk out of it whenever you do use them. So I understand that's where they make their money, but why would I use PayPal when I can use Zelle or when I can use Venmo? That's the big thing about it. They've been a great company over time, but we are in this market cycle. It's got to break up above that accumulation pattern for us to have some confidence in it. So do we see them scooping it up as we come back down every time we dip, or are we going to see it kind of just chop around in that area? I would even say it might take some time. If this company is to do well, right now we are getting back into, due to I've talked about this before, due to the debt spiral that we're in, the one way that the U.S. government's going to be able to get themselves out of this is to print money. That could cause these asset prices to expand and to go up higher, but we're going to have to, that's going to take some time for us to see. So will PayPal go higher? We'll have to see from there. Let's take a look as to what Max has to say for PayPal.
So it looks like we're looking at EPS at $1.30, 9.2% year over year. Estimated revenue at $8.1 billion, 2.7% year over year. Pretty mild, I think, for the industry they're in, if I'm being honest. But it's a good sign because they're positive, because I would expect potential downside because the sentiment is mixed. It's improving its margins, but to Eric's point, that growth is still very sluggish with them. You think of them as like a legacy company almost. They're like an IBM almost at this point, where they stay current, they stay relevant, they stay with the times, but at the end of the day, like, your parents probably have PayPal stock. So some important things, it's trying to rebrand itself as just more than just a legacy checkout button. So I think to all of Eric's points earlier, them trying to make this shift from just being this thing where you could transfer money and providing all these other services is where they're trying to focus. And they have a new CEO, Alex Chris. The company's focused on efficiency, monetization, and AI powered payments as well. But while they're trimming fat and boosting margins, user growth and top line acceleration remain a problem here. Now, what are we going to watch in Q2? Again, that EPS growth, it's strong, but it's already priced in. PayPal's been crushing EPS estimates. They beat by 15% last quarter. A small beat here won't move the needle unless guidance has a pop too. Revenue growth, it's still soft here, as I mentioned earlier. That's not exactly a growth stock number here. Flat transaction volumes and sluggish user growth are the culprits, by the way, of this flat revenue growth that they're looking at. Total payment volumes, another thing. 434.5 billion is estimated, and that's a 4.2% gain on the year. Steady but not exciting. Markets want double digits for those year-over-year numbers typically. Transaction margins are at 46.7% estimated, and that's up because they were 45.8% this time last year, which is a positive sign. It shows Chris is delivering on margin expansion even if growth is lagging currently. Active accounts, we're looking at 438 million estimated, barely up from last year. Is this user fatigue? To Eric's point earlier, possibly because we have Venmo, Cash App, Zelle, Chime. All of these banks offer ways to transfer money to people within the bank now where you don't need to use a Zelle potentially. Like with Chime, they have MyPay. I can send Eric money right now through Chime MyPay and he doesn't need to have a Chime account. It just goes to his phone number, he puts his debit card in, and then that money deposits to whatever debit card he wants to use. So these are things that we need to be aware of, especially with active users on a platform like this. Now, the revenue mix does matter here. Transaction revenue is at 7.31 billion estimated, and the value add services are at 767 million estimated. These extras are key to margin expansion. Think buy now, pay later, crypto rails, and merchant tools. Now, why does this matter? PayPal is cheap for a reason. Traders don't just want EPS beats, they want a new story. PayPal's multiple won't expand until the street sees proof of platform re-innovation. Turnaround play. CEO Alex Chris is talking big. AI integrations, better checkout, rebuilding Venmo. If any of that shows up in the numbers or guidance, we can expect some fireworks here. And then also a fintech war zone. Stripe is private for now. Apple Pay is eating away at the market share. Zelle and Square are gaining on peer-to-peer. PayPal needs to prove it still has relevance here as well. Now, the biggest risk with them is growth purgatory. PayPal's biggest problem isn't profit, it's the narrative. Investors want to believe PayPal is building a next-gen payment platform, but so far the metrics say it's just a leaner version of its old self at this point. There's no user growth, there's no standout product innovation, and they have flat total volume, which is flat excitement for investors. If Q2 comes in soft or management stays vague on guidance, the stock could drift again. So that is really what we're looking at here. Active users and growth and engagement, new monetization tools, Venmo recovery, and margin expansion are the top 4 things that you're going to look out on that guidance call as well. And those will be the catalysts that either send this thing to the moon, take it flat if everything comes in as expected, or if we come under, you can expect a pretty aggressive sell-off because, again, this isn't a sexy or exciting stock, let alone company right now that people are really looking into, let's say.
Yeah, and I was looking at stacks right here. If you look at insider trades, they've just even their management's just been selling off the EVP, VP, CEO, president. There's just a bunch of sells going on through this past year, selling off at that $60 to $70 range, and recently $73, almost $74 back on the 14th of this month. Politician tracker as well shows a few sells recently, last 2 to 3 months, but these are fairly small overall. So, overall, I would just say it's never a great sign if you see a bunch of insider sells from a company. That would probably, for me, lean me toward the bearish side in terms of this upcoming earnings.
Insider sells going into earnings is never a good sign either, because that means they could be expecting some turbulence from what these people are about to say on that guidance call.
Yeah.
Or for what they're going to give as guidance. That could be exit stage left for some capital preservation at that point.